In recent years, the Chinese economy has surged, with its products permeating markets worldwide. From the ubiquitous made-in-China tags adorning goods to the manufacturing partnerships with corporate titans like Walmart, Adidas, Apple, and Nike, China's influence is palpable. But as the world grapples with the aftermath of the pandemic and ongoing inflammation, the question looms: is China still the factory of the world? So, please stick with us till the end of this video to have a better look at the ongoing shifts across the manufacturing world. Expanding at a breakneck pace, China's trade skyrocketed over the previous decade. According to the official stats of 2018, China exported $2.49 trillion in goods. In short, Chinese exports surpass their annual import costs, which is brilliant for a country. And this makes them a powerhouse of manufacturing industries. So why does everything bear the tag of Made in China? And how does China manage to position its factories to get there? Well, for this, we will have a quick overview of the history of Chinese factories. The history of Chinese factories. The term Made in China was first coined in the 1940s as a result of a boycott of foreign-made products that led to the growth of Chinese manufacturing firms domestically. Moreover, during the period from 1992 to 2002, China implemented a series of incentives that seemed attractive to several foreign firms and investors across the globe. Starting in the late 1970s, China initiated a series of market reforms that laid the foundation for substantial change. To attract foreign investment, the Communist Party established special economic zones with market-friendly policies, greatly benefiting businesses and traders. Here we review two key factors. Lower wages. With a population of 1.41 billion people, China is among the most populous countries on the planet. That shows that the supply of workers is greater than the demand, thus wages remain low. At that time, the majority of Chinese were poor and living in rural areas, so when rural-urban distribution went upside down after the migration of people in the late 20s, these immigrants were willing to toil multiple shifts for meager pay. For instance, in the 1980s, the average Chinese salary was $416 to $508, starkly contrasting with significantly higher rates in America, where individuals were earning 40 to 50 times more. In essence, this made China an irresistible magnet for foreign enterprises seeking to maximize production while minimizing costs. Taxes and duties. China implemented the export tax rebate policy in 1985 to enhance the competitiveness of its exports by eliminating double taxation on exported goods. Under this policy, exported goods were not subject to value-added tax, VAT, effectively exempting them or providing a rebate. Moreover, imported consumer products from China were also free from import taxes. These reduced tax rates played a crucial role in keeping production costs down, making China an attractive destination for investors and businesses seeking to manufacture affordable goods. These reforms sparked significant growth, and today, China hosts numerous manufacturing hubs specializing in different sectors of the supply chain. For instance, Guangdong is renowned for its electronics industry, while the eastern provinces near Shanghai focus on daily goods, mechanical parts, and medical equipment. Cities like Wuhan and Chongqing specialize in the production of chemical products and auto components. How is China losing its position as the world's factory? As we have discussed, China's ascent as the world's leading exporter for many years was largely propelled by labor-intensive manufacturing firms offering low-cost production. This positioning elevated China's global influence significantly. However, outdated manufacturing centers dependent on inexpensive labor are no longer viable for China's economic growth. Let's delve into the reasons. Number 1. Rising labor costs. It must be noted that China is no longer a low-cost manufacturing hub. This is a major factor that is hampering the position of China as a global manufacturing giant. In 2021, Guangdong, China's primary economic region, raised its minimum wage by nearly 10%, reaching a maximum of 2,360 yuan per month. By 2022, Shanghai boasted the highest hourly minimum wage among the 31 provinces, standing at 2,590 RMB per month, while Beijing held the highest hourly minimum wage at 25.3 RMB per hour. Thus, this situation is forcing major companies to look for cheaper and pocket-friendly options such as Vietnam, Bangladesh, and India. Number 2. Aging population. A shrinking and aging workforce in China is also threatening the country's existence as a manufacturing factory in the world. The country's aging population is estimated to cross 400 million by the year 2036, which means China's labor-driven manufacturing expertise is also fading with time at a higher pace. Moreover, the country as a whole is facing stiff competition from other South Asian nations. Number 3. Trade tensions between the US and China. Apart from the challenges posed by aging labor and increasing expenses, heightened trade tensions between China and the United States has prompted numerous major tech firms to consider diversifying their supply chains. Notably, companies such as Apple and Foxconn are actively seeking to broaden their operations in India. This trend suggests that many enterprises are either reducing their footprint in China or relocating entirely. Number 4. Stricter border controls after COVID-19. China implemented some of the most stringent border controls globally, tightly restricting both entry into and exit from the country for 3 years following the corona outbreak. With the reopening of borders, China must face losing a portion of its manufacturing market share to neighboring countries. Since 2014, Vietnam has seen a staggering surge of almost 360% in long-distance trade, gradually capturing some of China's manufacturing business. Additionally, Bangladesh and Malaysia are emerging as contenders in apparel production, while Taiwan shows modest growth in metal production. China as the factory of the world in 2024. So, the lingering query remains, is China hailed as the factory of the world in 2024? The answer is yes, it is. But what keeps China in its esteemed position, you may wonder? One thing you need to understand is that despite shifting trends or losing a portion of its manufacturing market, China's industrial foundation is unrivaled in terms of range and depth. China's unparalleled ability to manufacture a wide range of products, spanning from inexpensive footwear to cutting-edge biotechnology, solidifies its dominance over the global supply chain. A working example showcasing China's strength is the way China made about half the world's supply of face masks. In February 2022, it manufactured around 10 million face masks a day, and within a month, they increased to nearly 120 million. Many countries didn't even have the infrastructure to develop their production capacity at that time. Apart from infrastructure, a consistent supply of raw materials, skilled workers, and money is also needed, and deep down we know no other country has such a manufacturing setup to take on the load. Moreover, if we look at the stats of 2023, when it comes to gross production, China's shares are 35%, which is 3 times more than the US's shares, 6 times Japan's, and 9 times Germany's. In addition to this, if we have a look at other famous companies, you must be surprised to know that 70% of Walmart's products come from China, 75% of Apple's products are manufactured in China, 46% of Nike, and 25% of Adidas. And these are big numbers. China still holds the cards of the global supply chain, and several businesses, enterprises, and companies still invest in the country. If we have a look at the FDI, that is foreign direct investment in China, the stats show that in the first 4 months of 2022, FDI increased by 26.1%. By the end of 2022, there was a flow of a whopping $74.7 billion in FDI. Long and short, China continues to remain the world's sole manufacturing superpower even in 2024. As of now, we know China is capable of handling anything thrown at them from a manufacturing standpoint. What do you think? Where do they want to go from here? Drop your thoughts below in the comment section. As it's time to end this video here, make sure to press the subscribe button and give this video a thumbs up.